Well, for more on this, Adam Hancock joins us live from Singapore. Adam, I just want to read you some of the latest prices we are getting from Asian stock markets. Taiwanese main benchmark index today down 9.6%. Hong Kong's main benchmark index 8.8% lower. Singapore Straits Times index almost 7% lower. Shanghai stocks down nearly 7%. Tokyo stocks down on the Nikkei almost 6% as well. It is a bloodbath, is it not? What exactly is happening there? What is the mood like among people working in and around the markets, but also among policymakers?
Yeah, well, the mood is very dire this morning because, as you've just mentioned, all of the major indexes in this region are selling off and selling off hard. We got an early insight this morning into just how bad things would be before the markets even opened, because in Japan, in their futures trading markets, the market had to be halted for a circuit breaker because the level of selling was just too high. So a market stabilization measure stepped in just to give investors a little bit of time to cool off. The mood really isn't being improved by the latest comments from President Trump. So far, he's showing no indication that he's going to allow countries to negotiate their way out of these tariffs. So right now, countries are trying to work out what on earth they can do. We've heard from the Japanese Prime Minister this morning. He said that Japan will continue to ask Donald Trump to reduce the tariffs on Japan, which are currently around 24%, those import tariffs. And also the Korean president as well, talking this morning about the market situation in his country, saying they're going to put together some kind of response that the trade minister will take to Washington in talks with their counterparts in the coming days. Countries in this region as well, they're also looking at what they can do to support their economies this morning. Japan and South Korea both talking about a package of measures to try and support businesses that are being hit by this. And the reason why we're seeing so much uncertainty and so much market volatility here in Asia is because so many of the major economies in this region, they are export driven. They rely on making things at home and selling them abroad. And of course, the United States is one of the biggest markets for that. But now businesses in the US, when they're looking at these huge tariffs, many of them are very high in this part of the world. They're going to look elsewhere because you don't want to be paying 40% import taxes on goods coming from this region. And that's going to cause major problems for economies across this part of the world. And we're seeing that reflected this morning in these huge stock market sell-offs.
Adam, I just want to ask you specifically about China. They are, of course, the first to really respond to Donald Trump's tariffs last week, adding 34% reciprocal levies on US imports. There is concern, it seems, among some at the moment about China's foreign exchange reserves and their ability to support their currency. Can you give us an idea about how much worry there is about the Chinese economy and how policymakers there might be looking at an additional response in order to shore up what is happening in there?
Absolutely, yeah. Well, the markets in mainland China and Hong Kong, they've opened around about half an hour ago. They were actually closed on Friday, so they're playing catch up this morning. And I think that explains why they're being so badly hit down. The Hang Seng Index, which is the benchmark index in Hong Kong, that's down around 9% at the moment. And the mainland China markets as well, all down over 5% and continuing to sell off. And I think the major concern for China is that even before this announcement from President Trump of these reciprocal tariffs, remember, he's hit China twice now with tariffs totaling up to 54%. There were many problems with the economy at home. They're suffering from a prolonged property crisis, high levels of youth unemployment, and a real lack of confidence amongst consumers. And a big staple of the recent annual meeting of policymakers in Beijing was about how they can boost domestic growth, how they can get people out spending money again in the country, because they were aware that there is a situation now where we're having an escalating trade war, and that's going to hit their export economy, which they've been using for the last few years to meet the government's ambitious growth targets. So this morning we've heard from Goldman Sachs saying that they're expecting more fiscal policy from the government to try and boost spending in the country to try and weather the storm that's happening around the world.
Yes, and Donald Trump, as we heard there, Adam, talking specifically about this fixation on the surplus that China runs with the United States. We'll expect to hear more from that and keep an eye on Asian markets as they continue throughout the trading day, and no doubt look ahead to what happens in Europe as well. Adam Hancock there for us live in Singapore.